But let's go back to markets because we're continuously hitting record highs. 25,170 is where we are at currently. If we can pull up the Nifty, and we're seeing a bit of a spike there, and largely led by banks. Let's pull up the contributors, and in terms of where we are in terms of our contributors, there you go. ITC, of course, FMCG doing well in trade today, top sectoral gainer in trade. You're seeing ICICI Bank, Reliance lead the charge along with Bajaj Finance. So the financials are what's taking, doing all the heavy lifting in trade today. Let's pull up the sectors as well. And there you go. Those are sectors. You're seeing FMCG doing well. Fin Nifty also doing fairly well. IT chipping in as well. So, and the Bank Nifty up around 0.4 odd%. And from the lows, if we can pull up the Bank Nifty, that's really carried the Nifty higher. You're seeing record highs on the Sensex as well now. So both benchmarks continuing to do well. Second consecutive day of record highs on the Nifty. But let's quickly bring on board Dilip Bhatt, who's the founder at Pedigree Advisory. Dilip, we've seen a fair bit of rotation, and that's probably what's playing out in trade today as well. Today's record high also largely due to rotation. We've seen a good participation from banks coming through suddenly, and that's why we've seen these record highs. You believe there's still scope for further upside from here, and what will be the sectors in focus for that?
Sure. I think, as what you very rightly said, the sector rotation has been happening very regularly, and that's the very conspicuous part about the indices that we have seen. And I think the same thing will continue because without any doubt, in the long run, we all know that indices are headed strongly upwards. Maybe on an annualized basis, indices will move by around 12 to 14%, but they never move in a very linear way, as what we all know. But certainly at the current levels, it is something that one has to tread very carefully. And I know that all of us have been telling about trading carefully, and in spite and despite that, the indices have been going up because there is a good amount of money supply that is coming in. So what I would say is that one should not be in a hurry very much to commit in the market. I think markets will certainly give an opportunity, if not in terms of correction of indices, but at least time-wise correction possibly it may undergo, and that possibly will give us some opportunity to have a very objective view.
We've seen this bit of divergence both yesterday and today, Dilip, with regard to the broader markets versus the benchmarks. So yesterday we clocked a high of 25,129, if I'm not wrong. Today we've breached that. We've gone to 25,170, and we've come off that. But the mid space, which is the broader markets, not doing as well. You believe that trend is likely to continue for longer? So do you believe a large cap outperformance is warranted?
Well, I think the mid-caps have had an unbelievable dream run that we have seen. And the kind of valuations that we are seeing, ignoring the cash flows, ignoring the kind of capital that they will require, and ignoring some of the basic fundamentals, I think I must say that the mid-caps have really surprised everyone on the positive side. And now with some kind of this technical part which is playing its part, I believe that the removal of margin on some of the mid-caps will also have its impact. So I would say that, yes, mid-cap needs to take a very serious pause. And I think one needs to dive much more deeper than what we have done over there. And it's time for the big caps really to outperform. Particularly, I would say that the FMCG sector looks very ripe for performing over the next 2 to 3 quarters. To some extent, I think banks people have been very, very tentative and apprehensive because of the NIM pressure and the lack of deposits being available to the banks for funding their credit growth. So I would say that...
Dilip, I'm sorry I'm interrupting. Within FMCG, could you give us a broader perspective? What do you like, before I come to banks, what do you like? Do you like staples? Do you like durables? Do you like the core FMCG products? How should one look at it? What do you like most?
FMCG space, I would go for the staples, basically. I think the likes of Levers, the likes of Nestle, the likes of Marico, I think somewhere these 2-3 factors will catch up in this. The subduing of the inflation, the pickup in the rural demand that we are seeing, and a good monsoon that has really happened is underway. So I think all this would lead to somewhere, I think in the next 2 to 3 quarters, getting reflected in the volume numbers of some of these companies. So that's how I would play the FMCG.
And financials, I'll allow you to complete that point.
Well, I think the financials also, the way they have underperformed of late, largely on the fears of compression of the NIM and possibly some fear of gross NPAs rising is what is expected. But I think the financials will continue to surprise in terms of the resilience that they have built in. So I would say that financials also look pretty good, and I would say some names like of course, ICICI Bank is leading the pack, but HDFC Bank, of course, has been a gross underperformer. That also looks pretty good. I would say something like in the PSU space, I would say an SBI or PNB would look pretty good and interesting. Or maybe in the NBFC side, I would say something like Manappuram Finance also would look good.
And do you believe that a rate cycle reversal, who do you think will benefit most? You spoke about an HDFC, but that one's not moving at all.
So, in terms of the rate cycle, I'm not too sure whether the rate cycle will get reflected in easing of the NIMs, because the deposits have been very challenging. Deposit growth have been very challenging. So I think even if the rate cycle starts, the RBI starts cutting down on the rates, I'm not too sure whether the banks will be in a position to do the same, because they would continue to compete very intensely for getting the deposits to fund their credit growth. So I'm not too sure from that aspect how this is going to play out, though I'm a bit more apprehensive on that front.
All right. Thank you so much, Dilip, for breaking this down for us, for joining us at short notice. Of course, Nifty continuing to flirt with record highs. We are very close to 25,170 still, and 82,200 on the Sensex. But let me welcome on board Gautam Shah, founder, chief strategist at Goldilocks Premium Research. Gautam, we've seen now back-to-back days of record highs. Further scope, do you believe, for further upside from here? And what will really drive markets higher now?
Hi, good afternoon. I think new highs has really been a norm for many weeks now. And I think markets have really climbed a wall of worry given the local developments around the budget and the elections and the global development that you saw early this month. And I think despite all of that, to have the Nifty at levels of 25,000 and beyond, I think it's quite commendable, and you have to give it to domestic liquidity. The point that we keep highlighting all the time. And I think the way global markets have also rebounded in the last couple of weeks, I think this tells you that globally, this trend continues to be quite strong. Indian markets remain in a good space. I know there are talks around valuation, but I don't think we are still over the top. And I think what happens in the US in the next 1.5 months on the elections and the rate cuts is something that Indian markets will be watching closely. And if we do have our own interest rate cycle reversal, which I think is coming, I think that's going to lead to new beneficiaries and new sectors doing well. But as things stand, we remain positive. I think there is more upside. There is no point trying to call a top or trying to find whether the market is overbought or not. I think the momentum is great. The next probably stop on the upside is about 25,500, and we head higher. And we are betting big on banks and NBFCs making a strong comeback. We are betting on metals making a strong comeback, chemicals making a strong comeback. So we are actually focusing on newer sectors as we head into the next few months.
Very, very interesting. Let me come to metals right off the bat. Levers for absolutely any push in metals. What would you look out for?
See, I think a lot of sectors just go through their routine consolidations from time to time. And in the last 2.5 months, the metals index has been absolutely range bound. We've seen a good rebound in the last 10 days. We are back at the upper end of the range, which is around 9,600 on the NSE metals index. On the ground, the news flow hasn't been the best. when we speak to people, and that's probably the reason the metals index has taken a bit of a breather. But I do believe that a breakout past 9600 is coming in the next 7 to 10 days. And on that confirmation, you could see the metals index appreciate by another 10 to 15%. So chartically, I think everything is in place. And also from a valuations perspective and from a risk reward perspective, I think metals is better off than many other pockets in the market which are extremely overvalued. So I think I'm very, very comfortable with a JSW Steel or a JSPL, Hindalco, Vedanta, SAIL, Nalco. And I think this entire set of stocks should do quite well over the medium term.
Got it. And do you think pricing led, will it also be volume push? What's your sense on some of those metrics?
Well, I'm not a fundamental analyst, so we don't go in depth into it. But my analyst tells me that it's going to be more of a pricing-led move. And these days the markets discount the fundamentals well in advance. So you might not have too much logic in saying that why metals will do well. I guess the logic will appear at some point of time, because statically, I think all the negatives that we saw on the ground has got absorbed really well in the last 2.5 months.
How quickly do we get to 25,500, Gautam?
Well, 25,500 is 2%. I think one good move on a Reliance or a SDFC Bank or a ITC, I think can take us there. And given the fact that we digested all negative news flow so well in August, I wouldn't be surprised if we are at that number sometime in the first half of September itself.
Okay, thank you so much, Gautam Shah, for giving us all of those views, for breaking this down, again coming on board on short notice. Thank you.